Hello future investors and welcome back to another weekly episode. I hope all of your investment goals are going to plan. Now today I want to talk about something quite important. I want to talk about gold bullion. Now gold bullion, the price has kept increasing. Gold has increased in price nearly 10% from this time last year and over 600% in 20 years. Now, why is gold continuing to go up right now? Well, you could say it's partially because of the inflation in the United States. The United States is forever increasing its interest rates, slightly like here in the United Kingdom actually, and that has had a massive effect on the price of gold because, as we know, when there's economic turmoil, people flock to precious metals, but more specifically gold as that investment to protect your wealth against the inflation. Now, if you were to buy gold, for example, 20 years ago, you could have picked up a 1 ounce gold Britannia coin for only £206. Whereas if you're looking to buy that today, you're going to be spending at least £1,635 for a 1 ounce gold Britannia. So that's a 600% increase in 20 years. So it's no surprise that gold is continuing to increase quite rapidly. Now, it depends on your mindset how you can look at this situation. Maybe you might be disappointed that the price of gold is going up because you're looking to buy. Maybe you're happy because you're a precious metal holder, and if the price of gold goes up, that means the price and value of your precious metal stack goes up. Now, I'd have to say the mindset that I try to use to look at this when thinking, am I happy that the price of gold is going up, or am I disappointed that it's going up? I try and look at it with a mindset like this: the poor criticize and the rich analyze. And I think that's very, very true. I actually got that quote from Rich Dad Poor Dad, Robert Kiyosaki's book on how the rich teach their kids how to live versus how the poor and the middle class do not. And it's very, very true. The rich analyze and the poor criticize. And you would have heard it many, many times in conversations from probably people you know, criticizing maybe rich people or wealthy people or rich situations, and that is the mindset that the poor or middle class have. It's easier to criticize than it is to analyze. Another one that is a very good quote that I love to talk about on this topic is, the love of money is the root of all evil. No, I don't think it is. Like Robert Kiyosaki said, the love of money is not the root of all evil, the lack of money is the root of all evil. And it's very, very true. The lack of money is the root of all evil, because when people don't have money, that's when they commit crimes and do bad things for money. So I think a massive way to look at this current situation with gold prices forever rising, not just right now, because this video could theoretically be timeless, because you might go, well, I won't watch this video again, or this video was posted a year ago, I'm not going to bother watching that because it's about today's prices. No, it's not. It's about prices now, but continuing to increase forever. Just look at the last 20 years, a 600% increase. That's more than you get in property. I mean, it's absolutely insane. If you were to look at the S&P 500 over the last 20 years, it has had an average yield of around 8%. Now, if you adjust that with inflation, it's actually around 6.25% in 25 years. Now, the average return, the average yield that a seasoned and good investor would consider good is 10% minimum. So, although the S&P is a fantastic investment, if you actually look at the analytics of it, over the last 20 years, its yield after adjustment for inflation is only 6.25%. So when you then compare that to gold, which has had 600%, it's no wonder that people still flock to gold these days to invest their wealth into it, because they say a good way to look at the future is to They say a good way to look at the future They say a good way to predict the future is to look at the past, and it's so true when it comes to gold. And there's no way that the value of this is going to devalue massively, because there's so much capital invested in it. You have to think the countries back, some countries still back their currency with gold. You've got more modern countries like United States, United Kingdom. We don't back it with gold bullion, but we do have huge reserves to, I guess, protect the country's wealth as a wealth preservation device. So although the price of gold is continuing to rise and every now and then fall, I think in the long term, it's just proven to be one of the safest assets time and time again. When you look at the percentages and the analytics of gold, 10% this time up compared to last year, 600% in the last 20 years, £206 for a 1 ounce Gold Britannia, £1,635 for one now. I mean, I don't think you need to worry about the dips and the ups when it comes to investing in gold. I think the best way to do it is to be doing a dollar cost average, which is where you invest consistently over a period of time. You buy when it's high, you buy when it's low, but what that does is it dollar costs average straight through the middle. So essentially, throughout a long-term investing period, you're actually getting the best investment for value for the money you're investing. And that's a way a lot of seasoned investors do invest. I'm doing that with the S&P 500 dollar cost averaging. So I'm not looking at the price if it's high one day and low one day. I'm dollar cost averaging, so I'm consistently investing the same amount on the same time every single month, which over my particular holding period is 20 years, should yield me a nice return. Now, I hope with inflation, it actually is better than 6.25% looking at the last previous 20 years for the S&P 500, because that is considered a relatively low return yield. The average sort of good standard, if you could say, would be 10%. Seasoned stackers and investors would like to say that 10% is considered a good yield. But in my opinion, having an open mindset, and again, looking at the way the rich do, they analyze, they don't criticize. I think 6% is better than no percent. I think, if you keep that money in a bank, you're going to get nothing. If you spend it on materialistic items, you're going to get nothing. So to invest that money and get a return of even 6.25% over a 20-year holding period is still a fantastic investment, because it's in the green. Your investment is giving you a net return of a positive yield. So sometimes I think it's easy to get bogged down by the statistics and the figures, and sometimes it can affect when or how you purchase your precious metals or your investment into maybe the S&P 500 or other stocks and shares, ISAs, or maybe even cryptocurrency. But I think if you're a young enough person, you can actually dollar cost average over a long period of time, and what you'll get is the best return for your investment by buying when it's high, buying when it's low, and it's a really consistent way of trying to beat the system. So overall, I wouldn't be too worried about the current situation with gold prices. It's going to rise, it's going to fall, but if you're investing as a dollar cost averaging investor over a long period of time, either way, you're going to be in a returning yield, whether it's 1%, 10%, or 600% like gold has increased in 20 years, it's a positive. So let me know what you think in the comment section below and how you monitor the gold and silver bullion prices. Thank you very much for watching, everyone, and until next time, I'll see you in the very next episode. As always, big shout out to the channel members, the Stack Collector and 365 Days of Silver. To watch another episode on future investments, click the link now.